Now let's move on to the other session. Sales revenue required to break even. Now, in our previous session, we discussed how to identify break-even point in units. So we calculated the break-even point in units. If you know the units and if you multiply that unit by the selling price, we can calculate break-even sales revenue. So that is one way that you can calculate the break-even sales revenue. So instead of doing that, what we can do is we can calculate sales revenue required to break even by calculating the contribution to sales ratio. So we call it CS ratio. So what is CS ratio? CS ratio means it's a measure of how much contribution is earned from each dollar of sales. So basically, it's a contribution margin to sales ratio. C means the contribution, S means the sales. So therefore, it is the contribution margin to sales. So it is basically a factor or a percentage that shows how much money a company earns for every extra dollar sold. So this is the meaning of CS ratio. So how do you calculate that? So calculation is simply you divide the contribution by sales. So thereby you can calculate CS ratio. So in our previous example, we calculated our contribution per unit. Contribution per unit was 4,000 and our selling price was 8,000. So simply you take the contribution per unit divide by sales per unit. So thereby you can identify CS ratio. So CS ratio will be 50%. So simply by applying this 50%, so you can identify the sales revenue required to break even. How do you calculate the break even point in units? By simply dividing fixed cost by contribution per unit. Now in this case, to identify the break even point in sales revenue, so what you need to do is simply you divide fixed cost by CS ratio. So sales revenue required to break even, how you will identify this? Simply you take the fixed cost and divide by CS ratio. Please remember, to identify break-even point in units, what did we do? We divided fixed cost by contribution per unit. But in this case, we are going to identify the sales revenue to break even. So therefore, fixed cost should be divided by CS ratio. So in our previous example, we had a fixed cost of 24 million. So what is our CS ratio? We already calculated 50%. So what is our sales revenue required to break even? 48 million. So if you earn 48 million, you will make no profit, no loss. Neither profit nor loss. Now let's quickly cross-check this 48 million with our previous example. So basically, our sales revenue was 48 million. So we calculated the break-even point in units, 6,000 units times 8,000 per unit selling price. So in order to achieve the break-even point, you have to make a sales of 48 million. So what we can understand from this particular example is, if you want to identify sales revenue to break even, there are two ways that you can calculate. First, you calculate the break even point in units and multiply by the selling price per unit. So thereby you will get 48 million sales revenue to break even. Otherwise, what you can do is simply you take the fixed cost divide by CS ratio. So CS ratio means contribution to sales ratio.